Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar's weekend webinar. Traders, in the weekend webinar, we like to take a broader look at these markets. We look at them, I guess, from a bird's eye point of view, and we try to see the forest from the trees. Because as day traders, we're in and out of those trees, but on the weekends, we like to make sure we're in the correct path of the forest. And I think for the longest time now, obviously, the forest has been pointing north in our indices. But what we ran into in the last few days of last week was this. Double top formations in the Dow Jones Transportation Average, in the NASDAQ, and in the Mini Russell. On top of that, now we have what I like to call flat tops. And flat tops produce market drops. That I have shown you in many videos, and I will show you again tonight in this YouTube video about market drops after seeing a flat top. So make sure you pay attention to this chart segment. Traders, this video is being filmed on Sunday evening, October 19th. Oh, actually, October 18th. For trading, October 19th, Sunday into Monday. Traders, I think that we have a 2-day pullback minimum. Hopefully it'll just be a 2-day pullback coming our way in the world's indices, especially here in the U.S. I will tell you this right now, do not fall in love with the upside. Excuse me, imagine that, that's from so long ago. Do not fall in love with the downside on this move. We're going to get a few days down, if that, and the buyers are going to come out of the woodwork. Traders, the U.S. dollar is cheap right now. Other countries that have their own currencies look at our stocks and say, that is cheap when I use my currency. That will bring buyers in if this market drops. So watch out. Do not fall in love with the downside. A little smooch on the cheek we're going to give it tomorrow because we have a red omni and there's no way to avoid it. Indicators are bearish. Chart formations are bearish. The market is likely going down because we know that the charts are always right and fundamentals come out in the charts first. If the charts point lower, usually it means there'll be some fundamentals that'll push us down a little bit. But we are technicians, and the charts with double top formations and flat top formations, you know, nothing you can do but go on the short side of the S&P tomorrow, no doubt. We also are looking at corn, traders, and we think the possibility of a cup and handle formation is forming in corn. We will monitor that situation closely, and we will take a look at it. So with no further ado, traders, let's go to the charts. Okay, traders, we are looking at the Mini Russell December daily bar chart. Mini Russell has a double top and what we like to call a flat top, traders. One of the rules we use at the Omni Trading Academy is this. Flat tops produce market drops. You have a top here, day one, top two, the second day, top three, the third day, plus it's a double top. And the market dropped all the way down to here, and indicators are quite bearish for this Sunday into Monday trading session. And the likelihood is another down day comes our way in the Mini Russell. The Mini Russell is one of those markets that shares leadership. It sits behind the NASDAQ. The order I find the leaders run in is the Dow Jones Transportation Average first, the NASDAQ is second, and then the Mini Russell tends to be a third leader of the S&P and the Dow Jones Industrial Average. So one of the leaders, double top and flat top with bearish indicators, gives me nothing but a red omni. Let's look at a few more charts here. Okay, traders, the second chart before you this evening is the NASDAQ December daily bar chart. The NASDAQ has a double top and a flat top once again, traders. Top one, top two, giving us a double top. One area where it topped, second area where it topped. Then you have a flat top, which does produce market drops. The NASDAQ dropped right down to the support area, which is this channel right here, traders, and watch this because it's going to be important. We are in a parallel channel. We've been doing quite well inside of this parallel channel all the way to the bottom of the chart. Friday, with that flat top and the double top, we came down and tested the support. Looks to me like we will probably break through it like this end up turning around within a day or two and right back into it again. But we are day traders, so we will take that one day at a time. What I do see for Sunday into Monday is bearish indicators and a chart that looks like it wants to go a little lower, especially after the flat top. So double top, we sell double tops. Flat tops produce market drops. Two more reasons why we should be looking for the downside or a red omni for Sunday into Monday's trading session for October 19th. Let's look at a few more charts here. Okay, traders, the third chart this evening, the Dow Jones Transportation Average Daily Bar deemed the leader. One top here, second top there. That is a double top that usually will be sold by us at the Omni Trading Academy. We chose to sidestep it Friday to see if it would be real. That was one day. You know we're jumping on the bandwagon for Sunday into Monday. So there is enough flat tops and double tops with bearish indicators in world indices and the U.S. indices to give us a red omni, no doubt. So you see the leader has a double top. You saw the NASDAQ had a double top. You've seen the Russell had a double top. Now let's look at a few more charts here. Traders, you are looking at the German DAX daily bar chart, December 9 contract. This has an outside reversal day down on Friday. What is an outside reversal day down? Well, Thursday's day was this big. On Friday, we went higher than the day before's high, went lower than the day before's low, and settled lower than the day before. That is an outside reversal. Outside meaning it went higher than the day before's high, lower than the day before's low. Reversal meaning it settled lower than the day before's action. Outside reversal day down, and now confirmed that it's trying to stay below the parallel channel it had been in for quite some time. Another reason to be bearish, at least Sunday into Monday in world indices. So another reason that we are looking for the downside. Let's look at one more world indice now. Okay, traders, we are now looking at the FTSE. This is the FTSE, the London Financial Times Stock Exchange, and flat tops produce market drops. FTSE does not have a double top. It looks like the S&P. It's got a top, but it's a flat top, and flat tops, boom, produce market drops. And likelihood is we'll start off on the downside in the FTSE for Sunday into Monday as well. You see many reasons before you to be bearish if you're a day trader, right? Now let's look at the indicators of the U.S. indices, especially the S&P. Okay, traders, you are looking at slow stochastics of the ESZ9 or the E-mini S&P market. Slow stochastics had gotten into their overbought range and then hooked, which generally begins a downward move or is a signal that a downward move may be beginning. Remember, do not fall in love with the downside. I'm looking for a day or two down and right back in the upward saddle or the bull saddle. We will take one day at a time, but don't fall in love with the downside here. Anyway, stochastics giving us a good reason to want to be short or believe in a red omni for Sunday, Monday. I'm going to rip right through these charts as quickly as I can. There's your slow stochastics. Let's look at the next one. Next one you're looking at is the CCI or Commodity Channel Index. Once again, had gone into the overbought area, turned around, and is now pointing lower. As day traders, that's a second reason or a second indicator pointing down. And I believe that with the other charts we just looked at and now the indicators, we are getting a clear argument for a downside on Sunday, Monday. Next is the Directional Movement Indicator or the DMI. And the DMI is clearly pointing lower. The green or the positive pointing down, the red or the negative pointing up. That is a bearish look. Another indicator confirming the downside for Sunday into Monday. And let's see what else we got back here. Relative Strength Index, traders, or the RSI. Once again, pointing lower. Many of the indicators that you will look at are clearly pointing lower. I believe we have a good argument for the downside for Sunday into Monday this week. Now, traders, we are going to look at the possibility of a cup and handle formation building in corn. Okay, traders, we are now looking at the December corn daily bar chart. And after it had a big run down, it put in a flat, but that flat appears to look like a cup. And if that's a cup, we should fall back down and fill this handle in. And if that is truly going to be a cup and handle, we should fill it in for a while and blast off to the upside. That is what a cup and handle will do if, in fact, this turns out to be a cup and handle formation. I have been monitoring this situation for weeks now, and I'm now beginning to play the corn a little bit because it's in an area where I think we have it captured. So let's see if we do fill in this area. We have a lot of trading in here that's relatively safe because we don't expect a runaway. And if it turns out to be real, we'll break out towards the upside at some point. For now, we have a possible cup and handle because we do not dictate to the markets what we expect. We watch the charts, we listen to the markets, and they tell us what's going on. But this is a place to focus your attention. See if we stay inside this handle for a while. I will keep you updated with this chart, and we will be playing the corn from time to time as this formation develops. Pull your charts, traders. Do your own homework. Make sure you look at all the indicators that you like to use on the world's indices, especially on the U.S. indices. The indicators I just showed you for the S&P look very much the same here in corn. All of them have gotten overbought and are now pointing lower. So corn will likely drop lower as it fills in this handle. Again, do your own homework on corn as well, and we'll compare notes at the site. So, traders, you see those charts? I should wind up again. So, traders, you see those charts? Those indicators pointing straight down, flat tops, double tops. In no way a bull like me is going to be bullish on a day like that, because if I said I was just bullish, that would be using my opinion to trade, and I am opinionless, traders. My opinion comes directly from the graphs, from the charts, from the analysis that I do. It does not matter if Oscar in here wants to get long. If the analysis says lower, I listen to the analysis. The analysis is my master, and I serve my master. And if you want to get this right, you have to do the same thing and block out anything that you think and serve your master. So make sure you make the analysis your master and listen to what it says. Traders, if in fact the Oscar who wants to be bullish gets fulfilled and it goes up tomorrow, we'll have our buy stops in. We will not lose too much on any trade because a stop is your best friend, and we never ever trade without stops. We put our stops in first, and that helps us not get emotional about our trading. Because let's face it, once your stop is in, you have a predetermined risk. You know how much you have to lose on this trade. There's no need to sit there and bite your nails and sit at the edge of your bed and look away and tap away at your computer and get all panicky. Your stop is in. So, just relax. Once your stop goes in, you put your order in, and that's a trading plan, and follow that plan. All right. Traders, I like to do the news when I do my weekend webinars, and I read a whole lot of it today while I watched some football. And, I just don't want to bore you with it. I mean, everybody saw what happened. The banks came out with earnings. Most banks came out with very good earnings. A few banks did not. Not the best gauge there, but showing that the economy is moving higher. Some figures came out better than expected. Everything looks pretty good as far as the whole picture in the economy. There's like a call to arms for Bernanke to raise rates, which I think would be insane right now. Listen, I understand this. If he raises rates, it'll boost our dollar, and that's good. But if he raises rates and boosts our dollar, it's going to punch our stock market in the face. It's the only thing we got going right now. Our dollar's going down. Our real estate is still going down. Our unemployment's going up, but we got buyers in the stock market. Raising rates and punching the only game in town in the eye is probably not the thing to do. Although I know probably at this point the Fed would like to, because a good strong dollar doesn't hurt when the stock market's bullish. But in this phase of the market, we need dollars to remain cheaper for a bit longer. Then dollars and the stock market can rally together. Because if this stock market maintains its legs, although we're getting a little bit of dip Sunday, Monday, who knows what will happen. But if it maintains its legs, and then the Fed after a while raises rates, it'll just show that this economy is shoring up, and the dollar and the stock market will go together. That will happen. That does happen in recoveries. And I'm saying right here, right now, you will see this happen in our future. But I hope the Fed doesn't force it to happen yet, because we need cheap dollars to spur foreign investment, to spur our exports, to keep our factories moving. And for now, that's the punishment we have to take. Our dollars get a little cheaper, but it helps us recover. So let's hope the Fed does nothing for a while. But again, I assure you, Sooner or later, the Fed will raise rates. It'll push up our dollar, and the stock market will go with it. You heard that here. All right, traders. One thing I did read in the news, which I thought was pretty interesting, Silvio Berlusconi, he's the prime minister of Italy. He, at this point in his life, is facing 4 separate corruption trials. And this is what he had to say. I read it in the papers. He said, yes, I am in favor of, he's in favor of making a referendum to the Italian Constitution that allows him immunity from the law. Could you imagine? Yes, it's about time that Italy has a little change in the Constitution, making me immune from the law, because I'm fighting 4 lawsuits right now. I thought that was a little strange. I read it, and I stopped, and I read the article again, and I said, could he really come out with that? This is the time to change the Constitution. I don't know what it means. I don't know what he did. I do actually. I've read some of the news as it happened. I don't care. If it comes out in the charts, I'll trade it. If it doesn't come out in the charts, send him sneakers and cigarettes when they put him in jail once a week, and he'll be fine. All right, traders. That's about all I got to say for this weekend webinar. Again, make sure you put your stops in because it helps you keep your emotions out. And one of the best things you can do to help yourselves with keeping your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.